This week, it's going to be the non-farm payroll. The non-farm payroll announcement will occur on Friday. We will definitely explain everything in a while. So I think we are okay to start. Guys, if you have any questions, please feel free to use the meeting chat, as I'm sure that most of you know how to use it. So before we start, as usual, to understand that I'm not here to provide, neither myself or the Elevating Forex, to provide financial or personal advice, okay? And who am I? My name is Theo Theodorou. My background is Greek Cypriot. And that's why was the reaction from Robert from Greece first on the line. So, and I've been trading, investing in the industry for about 12 years now. Also, I'm a certified financial technical analyst. I hold certification from the Society of Technical Analysis in the UK and from the International Federation of Technical Analysts. So I pretty much know well how to accurately analyzing the charts, and not focused of what I think, but focused on what I see based on the proper market analysis. Okay. I specialized in currency and in currency correlation. On a daily basis, I deliver market analysis for trading, prop firm, for hedge funds and individual traders. And I create courses about trading and investing. I publish articles in magazines, financial magazines, and many people, they've seen me doing webinars with Steve Nilsson, with John Bollinger, Daniela Kalle, and many, many other great traders and authors. So let's start, guys. Do you see my screen? This is the euro against the US dollar. Maybe I can use the watermark. It's going to be easier to know. Yep. Is it better now? Just to ensure, please drop a quick yes if you can see the screen. Euro US dollar, and this is the daily chart. Hello? Do you guys hear me? Yes, okay, perfect. So, yes, maybe the voice has a bit of delay, but yeah, that's okay. So we are on the Euro US dollar daily chart. Guys, last time, remember, the price was down here, and we said that drawing the Fibonacci from this point A to this point B, the 50% lies accurately with these low points here, which can act as resistance, and then the 61.8, it's somewhere above there with our inside resistance, the R2. Now, what happened? The price, of course, as we expected, it moved upwards. It came at this area here. Now, I wasn't trading to the upside, to be honest, all the way this move, because I didn't know that if the price will make it all the way here, because the major trend is down. The market moves downwards. It's in a downtrend. So at any point, the market can stop and continue its downward move. And let me share a secret, if you want, or a tip if you want, in the market. When the trend is established, you bet trading with the trend, it's going to increase the odds of giving you exceptional trading results. Okay, and once it reverses, it means it came to an end, and we're going to look for an alternative trading setup. Now, why I mentioned that? Because if you were patient at this level here, down on the 4-hour chart, you could have perhaps trade this bearish engulfing here, or if you scrolling down to the hourly time frame, and you would have seen this reaction here, and it could have been a good trade. Okay, that's why patience is key in trading. Now, to avoid any misunderstanding, the analysis, the overall market analysis we do on a weekly basis, it's not the momentum type of trading. Our traders send our signals on our channels. Okay, so you have to understand that also can add to your trading arsenal, and you can use also this type of trading setups to enhance and perhaps trade for more profit accumulation, considering the losses, of course. So from this week onward, what do we expect after the market make this lower low, lower high? It came back to an area of resistance that coincides with this 50% of the Fibonacci. Then from the technical analysis perspective, we do expect that the price will continue to move lower, of course. So if I want to trade a strategy that includes trend trading on the 4-hour chart, we can wait for a clear break and close below this low point. So the market will establish a lower low, and we can wait for a kind of bounce to the upside up to this bearish engulfing order block. You can mark it on your chart, and we can take some trades, and we can ride the wave all the way down to this bearish engulfing order block, the bullish engulfing order block. So we have it as bearish, and we can make it as bullish here. Okay, guys, that's simple as it is. Now, it requires some kind of patience. Any questions, please let me know. Or you can go to the hourly or 30-minute time frames and find those lower highs and lower lows and take advantage of the swings. And that's the best way to trade these markets. Next one, Great British Pound against the US dollar. Here is the daily chart. Same scenario. Last week, remember, we had this bearish engulfing order block marked in our chart. This one here. Okay. And on the 4-hour time frame, on Friday, only on Friday, the market touched, the price touched into the zone here. So from Monday onwards, we didn't even have any higher high and higher low. And I got a losing trade here, to be honest, up to this one here, because I was watching at this bearish engulfing order block, and the price didn't make me the favor to tap into this area here. So I got a losing trade. Price continue moved upward, entering to the next area of the bearish engulfing order block. And from this point, it sold off. Same, we wait for the price to break and make a defined lower low from this point A to this point B, and then we can start riding the wave all the way down. Now, if there is a possibility that the market will continue move upwards, of course there is. That's why we wait for the price to clearly take out this low, establish the first leg of the downtrend, and then look for short. So fairly bearish on the more, let's say, price action or swing perspective. Okay, I don't really like the word swing trading because it takes traders to another way of thinking, but it's a bit more, let's say, price action or higher time frame correlation trading, if you prefer that. Okay, guys, any questions? Please say something, let me know. Do you have any currency pair you perhaps would like to see analysis? Put it down. Australian dollar last week was a bit strong currency on the weekly time frame. Of course, it created this bullish move to the upside, but again, on the higher time frame, market makes lower highs and lower lows. Therefore, we wait with patience for the price to arrive at an area of resistance, and we go to the lower time frames like 4-hour, 1-hour, and try to find the entries now. This is important here, guys. We are on the 4-hour time frame, and you see here how many green candles, bullish candle, very simple stuff. Then 2 black candles for the retracement, then aggressive bullish buying orders here, and then more black candles, and this time their bodies are a bit more defined. Then less bullish candles, and then 1 bearish engulfing here, and then more bullish candles but very small bodies here, and now we start seeing the bearish candles. So it looks like that from this point here, the market's starting showing some kind of weakness. Okay, so this is an inside hint that tells us the price, it might coming to an end. And why this is great? Because it's around the 0.656 area, which is a strong resistance with a bearish engulfing order block. We refined this one to touch this point, so we didn't start looking for shorts from this point here. So we saved ourselves from a lot of losing trades. And now I will be waiting, let's say on the hourly, on the 30-minute time frame, maybe if the price make a lower low, if the price make a low lower than this one here, we can looking for short positions. Or if you want to keep things easier, you find another reversal price action here, like a shooting star, like a pin bar rejecting this R1 weekly high, and just go short. Simple as that. Okay. Henry asked for the Euro Canadian dollar. Of course, we will check that one. And a few people asked for the gold. Yes, gold also on the scope. So, did anyone traded the Japanese yen last week, guys? USD CAD, of course, we will analyze that one. Guys, did any one of you took any trades on the Japanese yen, perhaps the USD JPY or the pound or euro against the JPY? Tiago said, I did. Did you buy or did you sell it now? So USD JPY, did you buy or did you sell, guys? Now, based on the analysis we did last Sunday, we expected that if the fundamentals, they will turn negative for the Japanese yen, then definitely the US dollar, because it was already a strong currency, it will take advantage and it will skyrocket. Now, absolutely, we weren't expecting that the market is going to go into that much of euphoria, but we expected some kind of bullishness. And because the price, it was already at its all-time high price levels, we really didn't expect this to occur. So from Monday onward, we are in an uptrend. We want to ideally buy it, but I understand you are traders and you think that the trend, the uptrend, is over. I understand this. So there is a fairly logical amount of thinking why traders, they want to sell on an established uptrend. It's because they think deep inside them that they missed out this move, and now they have clarity, and with a bearish candle here, with a black candle, you're going to start looking for short positions. And it might going to retrace quite deep. I'm not saying it's not going to do that, but the key thing in trading profitability, ladies and gentlemen, is consistency. And consistency comes from trusting your trading execution. And if you don't execute the same thing over and over and over and over again, you will find it extremely hard to achieve consistency. Okay, so back to the chart. What I see here as a technical analyst, and not what I think it's going to happen, combining the technical analysis as well as the macroeconomic analysis, this is on a strong upward move. The RSI is overbought. It means that the market is strongly bullish. What can we do? We can wait for a kind of retracement, shallow or deep retracement, and we can look for long positions. Now, I wouldn't be keen to start looking for shorts right here because we are at all-time high. We don't have reference of previous resistance. Therefore, we don't know if the accumulation of sell orders entered the market and the price is about to reverse. Guys, the market only moves based on buy and sell orders, and which order absorb the other. Okay, it doesn't move for any other reason beside that. It doesn't move based on time. It doesn't move based on news. It doesn't move based on the moon or the sun. It moves based on the buy and sell orders. They've been placed and get filled in the market. So this is an uptrend, and we're going to treat it as an uptrend. You can use some moving averages if you want. They capture the strong uptrends extremely well, or you can use some Bollinger Bands or any other indicator to find some dynamic areas of support. Otherwise, you can wait for the price to come at these static areas of support. Okay. Some questions here. USD Canadian dollar, yes, we also analyze that. Someone said, no, I was watching 1 or 2. Adam said, I sold it. I thought it was gonna go lower from the historical high. That's, sorry, not at none. So before, I didn't read your message, but I'm sure you understand. I didn't read your message earlier, but I'm sure now you understand why you had that thought, because it's normal. Okay. Robert said, is it not dangerous at all-time high to trade? No, it's not dangerous to trade at all-time high as long as you don't attempt to sell, because you don't know which one is going to be the top. Like traders here, they thought it will be the top around 155. The top wasn't here. Other traders, they thought the top is going to be here around 155.5. It wasn't here. And imagine those traders, they didn't even put a stop loss in the market. Okay, so as long as you go with the trend, it's fine. Most positions bought, that's correct, Diego. Asim said, I will really appreciate if you do analysis on the Euro Australian dollar. Thanks, we will do that. Gold, it's on demand. We will analyze the gold, of course. Let's check the Euro Australian dollar. I want to delay the gold a little bit, and we're going to see it in a moment, because there is a reason. The gold and the US dollar, they are kind of correlate heavily. And I want to put the news first to see what we expect. Let's check first the Euro Australian dollar. So remember last week we said that the price it's at this resistance here, right? And we said we don't know if it's going to break to the upside, but also we don't know if it's going to move lower. Okay, so I was pretty much on the side on the sidelines, because moving averages, they were pointing upward. But it was a resistance here, and we see the price that didn't break above the resistance. So at this point, the market created this bearish candle, and it hit this support. Now, is it just very coincidental that the price, guys, please pay attention to me now. The price offloaded so much, declined so much, and we had this low point here marked, and we had also this low point here, and the price stopped right at this area. Okay, you have to start also thinking from a kind of logical perspective, because remember, again, there are buy and sell orders in the market. There are no buyers, there are no sellers, there are no physical people. It's only buyers, it's only buy and sell orders. So why the sell orders didn't overcome all these buy orders right here, and why the price at this area of support didn't continue to aggressively break the level. Why? Perhaps because they tried to mislead the market. That was the lowest point the big funded trading hedge funds and firms wanted the price to reach. If we go down to the daily chart, we see that the price stopped right here. Although minimal activity one day before at this level, suddenly on Friday, boom, explode to the downside. So at this point here, you see the market is clearly on this range. Yeah. So we don't know if this is going to break or it's going to bounce to the upside, but what we only can trade is what we're going to see. We want to see bullish engulfing price action like this one here, or a kind of rejection of the support and the price to bounce upwards fast, like the hammer or the pin bar, bullish pin bar. And then we can start looking for long positions, but we have to also understand that's a low probability trade because the market is trendless. So you understand this, that a reversal price action, yes, can push the price higher, but also there is low probability. Doesn't mean it's not going to be a good trade if the price it's going to move to the upside, but it's all about probabilities at the end. Okay. And next one I would like to see, it's the Euro Canadian dollar, and I will take very fast this one, guys, and then we're going to go to the gold. Okay. So Euro Canadian dollar, moving averages, they are pointing an uptrend, but the price is declined. Found support at this point here on the daily chart. You can see it, not that better, but again, the market doesn't have any kind of structure. It moves sideways, so now it's still in the middle. If the price reach this level and reject it, then we might gonna see some bullishness here. Okay, Euro New Zealand, on the weekly chart, we see that, and we were expecting to continue moving upwards, to be honest. Moving averages are pointing upwards. Price makes higher highs and higher lows. So on the lower time frames, daily 4-hour chart, we would like to see the price retrace, find some bullish price action, and of course go long. That didn't happen yet. I'm not really keen from now to look for this one here. I want to see some long defined candles before I attempt to go short. The Great British Pound, Australian dollar, guys, we said about this one last Sunday. We said that the pound was very weak, and this reversal price action here on the weekly chart, it was our catalyst to go and find the confirmation on the 4-hour time frame to go short. That was the strategy, and I gave you that one, and I'm still giving you that one. And I'm waiting that day when some of you will post on the webinar, hey, Theo, we did the analysis here, let's say, on the Great British Australian dollar. I understood that, and I was patient on the 4-hour time frame. I was looking for that price action reversal at the level of resistance to execute. Guys, because I don't do these webinars here on a daily basis, I cannot give you daily updates. So this level here, for example, that's the 4-hour time frame. We confirmed the weekly that it's a reversal. So we wanted to execute. The analysis is done. That's all. The analysis doesn't need to be complicated. Simplicity is the mother of execution in trading. Write this down. Simplicity, simplicity, simplicity. We identify this bearish engulfing order block, and that was the first sign we would like to take the trade. The price didn't come all the way here. It came up to this point and stopped. I didn't get involved with this one, but once the price it came up to here, then that was the good catalyst to trade, because under the sell orders here, bearish engulfing with the weekly time frame confirming the price action reversal. That was a high probability trade, okay? And that was the only one, to be honest. Next one. So from this point onward, we have to wait. Let me zoom out a little bit. We have to wait for the price to either break below these levels here. And if the price breaks below this level, honestly, it's going to have a lot of room for trades. So be patient. If it doesn't break below this level, guys, and it's going to bounce to the upside, we need some kind of confirmation on the weekly chart that the market turned, and then we can start looking for long positions. Okay, Great British Pound, Canadian dollar, the price found some support here, but I'm not that, it doesn't have that clarity that we want to see on the charts yet. The clarity here will come once the 4-hour time frame will give us the new higher high. So far, we have only one higher high here. And in technical analysis, guys, if you want to identify the turning point, you must have the rules that they are the rules based on technical analysis, not the rules based on anything else you might think or you might saw somewhere. To draw a trend line, for example, we need to establish 4 points. Out of these 4 points, the 2 points are the highs and the other 2 points are the lows. So how on earth I see traders and they find, let's say the market make, for example, a higher, whatever it's a higher high from here, and then they find this this low, and they say, okay, we have an uptrend here because we have 4 points. We don't have 4 points. We have only 3 points here. The 4 point, it's going to come once the price makes a high than the high we identify on the trend line, not the high we identify on a ended on a finished downward move. That's done. So you don't trade here, you trade here. So you want to see what's going to happen at this from this point onward. So this is the high we want to see a break to the upside. So we confirm that 1 point here, 2nd point there, 3rd point here, and the 4th point is the confirmation, and then the pullback, it's going to be the signal to trade. Okay, I hope that makes sense. This stuff, when I say to everyone that I do the private coaching, it's not, sorry for the expression, when I do private coaching, guys, I don't babysit anyone. If you're going to come with me to sit on any session and we're going to do a private mentorship or coaching, I'm going to take everything from A to Z to make sure you will learn it fast and you will be able to apply it with confidence. That's all. You have to become the trader, right? So that's what we're going to work our way for. And yeah, next one, Pound New Zealand. Pound New Zealand. On the weekly chart, this is a good sign because the price, after price makes higher high on the weekly time frame, which is great. Now it pulled back here, and on its way up, it creates this reversal. So we were expecting, and this is very common to see in the market, guys. After that, we were expecting to look for short positions. Most traders, actually, they were expecting to look for short positions, but the trend is up. That's exactly, I explained previously with the USD JPY if you were here. So why to try and trade against the trend, and we don't understand that if the trend reversal will occur, we're going to see it on the chart, and we're going to wait for the setup to trade with the new trend. Because the market, many times it behaves like this. It goes up, it goes up in an uptrend, of course. Then it comes down, then it's tried to go up, and it creates this reversal. Now, it's not a sign that the market, the uptrend, reverse, it's a sign that the uptrend temporarily stopped. But after we see this reversal price action, it's a confirmation that most likely we're going to keep looking for long positions. Now, on the 4-hour chart, what we want to see, we want to see a kind of higher highs and higher lows. We mark our resistance, let's say here, or even down there, the first area. And now we know that we have this room from this point here to this point there to take advantage. Now, how we're going to take advantage? Adriana said, hi, did I join late? Have I missed gold? No, we're going to see gold in a minute. Why this is the room of opportunity? And sorry, how we're going to take advantage of that? With two ways, guys. Either we're going to use the smart money ideas and the order block setups that I also teach. I can teach you how to trade them on the lower time frames or on the 4-hour chart. Or the simplest and easiest way is to wait for a price action like this bullish pin bar, this one here, or bullish engulfing, to enter long, stop loss under the lows, and we wait for a take profit above here if the market give it to us. Simple as that. Okay, to overcomplicate it and then to go and blend the divergence and the convergence and the RSI on the 5-minute chart and the MACD on the 1-hour time frame, you are messing up with your trading mindset. Okay, so and in a simple line, why traders they do that? Because they want to make sure that they're gonna have a winning trade, because they want to be sure about the outcome. So guys, before we look at the gold, we must understand what can affect the gold this week. And the gold will definitely be affected first on Wednesday, May 1st, by the Fed's interest rates decision and also by the FOMC press conference. These events will happen late night on Wednesday. And again, I would like you to remember that on Wednesday, the European markets, they're going to be a little bit in a low volatility because of the major banks in Europe, they will be closed, and other places in the world. But that's not the real issue. The real issue is that the spreads, they're going to be very wide. Low volatility means widened spread. Sorry, low liquidity means widened spreads. Okay, so be careful with that. And non-farm payrolls, of course, I'm not going to talk about consumer price index and all this stuff. You can read them yourself. But non-farm payrolls, it's the event that the market, it's going to establish the direction for the next 2 weeks at least. So if the non-farm payrolls increase, we might going to see a strong US dollar. Of course, the FOMC minute, it's going to also determine of the monetary policy statement. It's going to determine the performance of the US dollar. But remember, guys, next week, the majors, they will be traded in a narrow ranges until Friday. They will spike only, and they will show large candles only during the events here on Wednesday. And on also on Thursday, there are 2 significant news events that this calendar doesn't show them about the US dollar. And also on Friday, the spike is going to be enormous. Therefore, we have to understand, based on the expectations, that the markets might going to be a little bit choppy. Okay, now let's check the gold. Remember last week on the gold. Does anyone remember what I explained you here, guys, on the gold? It's not like I knew what's going to happen, but it's simple, practical things of technical analysis. Now, the market, it's in an uptrend, okay? Makes higher highs and higher lows. After the market printed this bullish, and it's at its all-time high, right? After the market printed this bearish candle here, we were expecting at least a minor retracement. The minor retracement never occurred because next week it was an inside candle. But this is very, very, that's actually great indication for us because it adds on the retracement. Remember that the dominant force in this market is the buy orders. So all buy orders, they are by far more significant than the sell orders. That's why this uptrend is established and it rallies. At this point here, it looks like the buy orders, they weren't that strong to overcome sell orders. But again, the sell orders didn't overcome the buy orders. So it was a kind of equilibrium. And it shown with this inside candle, the market was in an indecision. And sometimes the way you speak about the price or the words you use to explain what happens in the market, sometimes mislead your thought about the reality. So this one here, the market, it's better in an equilibrium stage rather than indecisive. Why? Because if the market is indecisive and it has an indecision here, how can a market participant, which is the trader, you and me, be confident to decide? Think about it from the logical perspective. So the market is never indecisive. The market, it's either in an equilibrium where the buy and sell orders are coexist, let's say in number and in volume, or the market has more buying orders or more sell orders accordingly if it's an uptrend or a downtrend. So after this one here, we expected that, hey, if the sellers, they will appear, they're going to do it a bit obvious, and the market declined. Now, the market declined, but up to this weekly low, and then it bounced to the upside. Let's see it on the 4-hour time frame, how it looked like. And it was this point here, decline, enter into this swing high and bounced off. Now, if it's going to continue its move to the downside or its move to the upside, now we don't know why. Because, sorry, not we don't know. As the market is in an uptrend, we expect it to continue to the upside. From where we can enter long positions, that's the question you have to ask. Not if the market will continue to rise, because the weekly time frame, it's in an uptrend, it's not in a downtrend. But if the weekly continues for a couple of more weeks to decline for the retracement, it means that the 4-hour time frame, it will show lower highs and lower lows. Okay, it doesn't mean that the price, the market, it's in a downtrend, because your higher time frame is your primary trend. Now, if you are trading the 1-minute chart and you do analysis on the 15-minute chart, of course, your primary and major trend is the trend you see on the 15-minute chart. Okay, let's don't mix them. But for this more high, more accurate market perspective, we use the weekly and we execute on the 4-hour. Extremely, extremely simple, high profitable strategy. Okay, so if the price starting from Monday will move to the upside and they will enter into this daily bearish engulfing order block, you can trade it if you see a reversal here. And that's what I'm going to do as well. But if the price is going to move aggressively and penetrate this daily order block, then let it be. What to do? I can't help it, right? But on the other hand, if it finds the reversal, it's going to be a high probability area to look for shorts, and we're going to go short. Now, if the price declines and enters again at this previous week's low, which also coincides with the 50% of the Fibonacci retracement starting from this point to that point, and we find some bullish price action, yeah, why not? We can look to buy it. Again, trading, it's all about probability, and the best thing being a trader is that we never know what's going to happen next. We always live with the uncertainty, and we have to learn how to be comfortable with the uncomfortability of not knowing what's going to happen next. Okay, it's a not a deep subject, but it's a little bit beyond technical analysis subject, this one, on how to create the consistency in trading. Okay, I can give you all this stuff, that's not a problem. So guys, I think we cover almost everything here. If you want, for a couple of minutes, I will go through these 5 pairs. Australian dollar, Canadian dollar, it's at this range here. Let's wait if the price breaks to the upside or to the downside. Yeah, if it's gonna, I'm not gonna attempt to trade the Aussie cat right now. Okay, Australian dollar, New Zealand, still room to the upside. This can be a good opportunity from next week onwards, so keep that in your chart. This kind of bonus for those who are staying until the end as well. Okay, and New Zealand, Canadian dollar, the price create the reversal here. So price create that inverse hammer at support, weekly support, 1, 2, 3, 4 low points. So on the 4-hour time frame, we might gonna see some solid divergences, bullish divergence. Let's let the price to move a little bit lower, and if reversal price action here, boom, that's our entry, and we're gonna buy it. Okay, you see how the setups appear all of a sudden from this webinar. Australian dollar, Swiss franc, the price makes higher highs and higher lows, rejected the lower points here, and it created this bullish candle. Actually, this Swiss cross pairs, they didn't give us any good entries, although I was watching closely the Canadian dollar Swissy, and I was looking for a retracement last week to buy it. The retracement didn't happen at any level I was looking for that, so I didn't trade it, although I'm still bullish on this one. Look at the weekly. It's exactly as we planned it on this webinar last week. And the New Zealand Swissy at resistance here, I'm not looking to get involved with that one. Did you already go over pound Swissy? No, and for a reason I don't analyze the pound Swissy, neither the Euro Swiss. So pound Swissy bullish, everything looks bullish, but again, remember there are only which is enough 50 pips to be made on this one. Okay, guys, because there is a strong resistance here. So the room of opportunities from here to there. Bruce said, do you see gold? Do you see gold bullish tomorrow? I see a fair value gap. It has to tap in. Yeah, of course. If it's going to tap into that fair value gap, why not? Absolutely. As we said, it's in an uptrend. All right, guys, again, it was a privilege and pleasure to host this webinar for you. Myself, Theo Theodorou, and the Elevating Forex team would like to wish to everyone a fantastic evening. We forget our friend Robert with the USD cut. I'm apologies for that, and I'm going through right now. So bear with me. Did anyone trade the USD CAD? We identified the 4-hour head and shoulder pattern. I took too much out of it last week. We had that head and shoulder pattern, reversal price action on the weekly chart. So there were a couple of entries here. One, and the second entry was, I think it was on Thursday, this one here. And so for now, the price makes higher highs and higher lows. Here is the weekly chart. Price makes higher highs and higher lows. I want to see some kind of double bottom reversal price action here on the 4-hour chart if I want to go long, but I prefer to see that that reversal on the weekly chart. For the 4-hour, it's still down. The moving, the RSI is turning upwards, but yeah, there is also this fair value price. I call it what you call fair value gap. I call it fair value price because it's not a gap, it's the price actually here. So as long as we mean the same thing, we refer to the same thing, the implications is the same. So if the price comes here, I will be looking to see some kind of reversal price action to go long because it's a very, very strong area of support. But if the price will break aggressively this level here, I will use it as resistance. Okay, that's the analysis for the USD Canadian dollar. Euro USD, we full bullish from Monday. Okay, I will be thinking more the Euro USD short, to be honest, because of the technical aspects there. But again, it's everyone analyzes the market differently. So guys, with this and with that, again, have a fantastic evening to everyone. Let's rock the trades from tomorrow onwards. Okay, remember the majors, they're gonna play sideways, they're gonna trade in narrow, tidy, sideways ranges because of the events they're gonna be on Wednesday, Thursday, and primarily on Friday. So bye everyone, thank you so much. If you need anything from me, please message us at support and Gios will pass on the message, or you can find me with Theo Theodorou on the Telegram, on the Instagram, on the LinkedIn, everywhere. Okay, my profile is there, and you can contact me for any questions you might have. So good night, and again, thank you very much. Bye bye.